One of the biggest difference between profitable traders and the ones that are losing money over the long term is those who are profitable tend to look better at the market context. They don't trade when they see a good setup. They trade when they see a good setup in the right context in the market. And they're able to identify the days they shouldn't trade from the days they should trade. Today I'll give you a few tips to do that better in my perspective of market context. Some things I do to look at the context better and to filter my trades much more accurately to get better results in the market. So here you have an example of Bitcoin. Now, this is not something I want to talk about too much. I don't trade cryptocurrencies like full time. I take a few trades on Bitcoin here and there when I see a good trade on it. But a lot of filtering goes to this pair because we have a lot of volatility. Price goes up and down very quickly. And really, we have to be careful of what we trade. If you try to short the top of Bitcoin, you're going to have a very hard time and you might be losing money overall. We've got a few examples here where we have long trades that produce big moves. See how we turn a very small candlestick, but we have some ideas that the price will go up. This is, by the way, a whole moving average in the background. So we have the moving average telling us that we should be going long because it's green. Therefore, we go long. Now I have a few more rules beyond that too. But see how big this move is, right? We get to 10R very easily. And again, we have the same thing over here. Compare this to when you want to try to go short on a specific pair like this. I mean, you could squeeze in a 1-to-1, but that's about it, right? That's about it. I only took this trade here. I only went short because I saw we had a big candlestick and we have a really big change in the pace. We have a big wick, bearish engulfing candle that's really strong, and then we go back in this way. Now we have another trade over here, but see how this one is different now, because even if you have a bearish candlestick, this isn't strong enough to show us we're going to go back to the downside. It's barely a candlestick that kind of gives us a little bit of momentum, but very brief. They would go right back to the other side. I think I need to point this out very clearly, but this is a trade I wouldn't take for sure. So what can you do to filter the market context better, to really understand how to trade and when not to trade and all these different subtleties about the market? Well, we have a mastermind call we did with our students a few months back. It's usually a paid training, but I'm going to give it to you here for free. Check out the below in the description. The first link will be to get that training. And it kind of goes through a lot of filters, especially for day trading, for swing trading, things you can do to filter the context better. It will go a lot more in depth in this video. I'll give you my tips in a second, which are very important also. But get that training first. Open this in a new tab if you can. Go and sign up for this training. You're gonna get it by email. And we will go through a lot of different things we cannot talk here on YouTube because it will take an hour or more. But that is gonna be very useful to learn the context from a pro trader. All right, so a few things I'm doing here for the market context. First of all, I've been kind of clear on this before, but the trend is very important. You don't want to trade a short on pullback. You want to try to go with the trend, basically. So if you try to get pullbacks and get a 1-to-1 out of it, yeah, that's fine. That's cool. Once in a while, you can do that if you have a strong evidence of momentum going down, but you don't want to do this every single time you have a bearish setup in an uptrend. Trying to ride the trend, whether you do reversals or even pullback kind of trades, is a good thing because even if you try to catch a reversal, you can always align it with trends on bigger time frame. So that even if that reversal works, it can go a long time in your favor with that bigger time frame trend. The second thing is I look a lot at candlesticks, especially in this strategy here. This is a daily chart. We're not in the day trading kind of thing, but we are still looking for a strong momentum on our side. I look at candlesticks because it gives me a good idea of whether we're going to go with my trade or not. And it doesn't really help me to take better trades, but it really helps me to filter the trades that I have going on and see if I have to get out. Especially looking at when I take a trade, how's the next candlestick? In this example here, we go long right here. A bullish candlestick, quite strong. We have a big wick here, but it's still a pretty strong candlestick. That's a good sign. Now, once we start getting a few bearish candlesticks, one here, that's 2, that's getting a bit more worrying. Like go up, 1, up, 1, 2, and so on. We see that we kind of lose some momentum here. And also we're kind of going sideways even, so that's not good. Here we have 1. We could have been going a bit more up on this trade, but these 2 candlesticks here will kind of break it. Also, we break this moving average here, which is a big factor. So whenever we have price the above moving average, coming back to it and breaking, closing below, that's usually a sign that we lose that kind of trend. It's usually a sign that we are not going to maintain that upslope. We're going to maybe go down to a more moderate trend, or we're just going to not trend anymore, and we want to be able to get out of it. Again, here we have a good setup. What's the next candlestick doing? Bearish candlestick. Well, that's not that good because we are supposed to go up. We have this big bearish candlestick that brings us back down almost to the lower candlestick before, the lower engulfing. Not too good for a bullish trade. In this kind of scenario, I would try to either get out of the trade or maybe close half of the trade or find a way to kind of reduce my size on this because I know we're going to maybe not go to the place we expected to go. Like it's a lot less momentum. The bars were not anymore on our side. We're kind of exhausted from the past big uptrend here. And so we tend to skip that kind of trade. Again here, nice setup, bullish engulfing candle. But the next candlestick here is not even going beyond the high. So we don't have any momentum here. We would never want to take that kind of trade because we have no momentum to go on the upside afterward. Here's a bit different. So we have an engulfing candle, good setup, and then we go above it, but we pull back down. Now, are we pulling back down a lot? Do we have a big indecision here in the market? Well, I don't think so. It's kind of a small pullback, which I would tend to keep my trade in that. I would not tend to take too much size off. I mean, you could do that if you want, but the odds are still here that we are having a good bullish move, just a little pullback at the beginning. We went beyond the high, we came back down a little bit. We still have a lot of possibility to go on the upside. And in fact, that trade worked out quite well. Now, this isn't going to work 100% of the time. It's going to sometimes not work, and that's part of it. Here's an example of where you have a bullish candle afterward. Bit of indecision here. You could argue the sellers to get back down quite a bit, but overall it's still a pretty decent trade. Here, of course, we had a lot of bearish movement, bearish candlestick engulfing here, bearish candlestick again with the gap. That's a good sign we have a downtrend coming, or at least a good decent pullback. And here, once again, short candlestick here. After that, it's bullish, strong bullish, almost to the beyond the half of this engulfing candles. So we have a lot of bullish momentum here, and we don't want to be short in that kind of scenario. See how this works out? So a few things here. The moving average is important. The trend, the candlestick are also important. You want to be able to go in trades that work out for you pretty quickly, not take like a long time to go back and forth and waste your time and take a month to close. Those trades never work that good, and if they work good, they're just like a waste of your capital. But if you want to learn more tips about how to understand market context, filter better for your day trading style, for your swing trading style, check out the link below. It's a full training. Again, this is really something I would offer paid, but it's free for you here on YouTube. You want to sign up for this because it's going to be something that I've not seen covered on YouTube very much. It's something that is more in depth. If you're really serious about trading, you want to get that training for sure. Again, it's 100% free, and you definitely don't want to miss out on this. If you like this video here today, make sure you give it a like. I would really appreciate your thumbs up on this video. Comment below if you have any questions or thoughts about this kind of context. Anything you do differently, let me know in the comment section below. Anything you do the same, also let me know below. And let me know your thoughts on that training also. I'll be curious to hear what you think, what takeaway you got from it. You can always comment below, let me know. I would appreciate that. Again, a training we offer for a paid student for free here on YouTube, so you can check it out, learn from it, and get some good results. And I want to hear your thoughts and your results from it. So thank you guys for watching, and I'll catch you back here in the next video pretty soon.